What advice would you give people who want to break into private equity in this day and age?
Private equity does attract a lot of alpha personalities who went to the very best schools, went to the big fancy investment banks. You just need one or two deals to suddenly think you're the king of the world. That arrogance that is up here is perhaps one of the biggest issues which some private equity executives have. And once you become that arrogant, then you stop seeing, you stop listening, you stop noticing the red flags. And that's where mistakes happen, and that's when careers end.
Welcome to You're in Business. We're joined by Hazem Ben-Gacem. He's a veteran private equity player who has closed some of the biggest deals. He's today the CEO of BlueFive Capital. Welcome to the program. I want to start with the big picture. Private equity thrives on long-term clarity. We're seeing these shifts in U.S. views and policies, from tariffs to regulations. How is that affecting your ability to make decisions today?
Well, first, Yusuf, thank you so much for having me on your show, and so great to see you again. Look, the world has never been a steady ship, really kind of going back, not just the last few months, but going back for the last few decades. Private equity, in large part, is our returns are driven by long-term macro trends. And in a way, when there are paradigm shifts, which there is today, driven by the geopolitics between the two world's leaders, that creates challenges, but also opportunities. And I guess as investors, we just educate ourselves, get to understand exactly what are these trends, what impact they're going to have on certain industries, geographies, growth trends, and what have you, and act accordingly. So, Yusuf, I would say that in periods of volatility and change, opportunities exist. And that's where I like to think how we at BlueFive and our peers see the impact this change in the industry will have on our business.
You've done deals across continents. How does the unpredictability stemming out of Washington influence your appetite for U.S. versus non-U.S. assets?
So what's very clear, and we do spend a lot of our times in the global south between whether it's the GCC, Southeast Asia, China, and other parts of the south, more and more it seems that the south is looking for a stable source of trading and economic relationships with many of their peers in other parts of and any regions in the world. I think what we have seen perhaps a decade or so ago is the economic superpower of Europe and the US, and to a large extent, the bulk of the world have been looking to how to trade and be closer to that part of the world. Today, we're seeing that will continue, by the way. However, more and more, many of the various players across the South are more and more trying to look at foster relationships that go far beyond the traditional G20 players.
And then there's growing concerns about the US dollar. It's moving from weakness to weakness. In the meantime, gold sort of soared to $4,000 an ounce. I'm wondering, do you hedge against debasement, or do you think those fears are overblown?
Well, the dollar has held an incredible standing now nearing 100 years. I suspect, Yusuf, in our lifetime, that will most likely continue to be the case. However, in what appears to many as the weaponization of the dollar, that will inevitably create room for thought into what could be the substitute. As of today, there is no substitute. Neither the euro, nor the sterling, nor the other currency today comes anywhere close to the standing of the US dollar. We'll see what the Brexit nations would do. We'll see if the Chinese yuan one day will become convertible. These could be very, very sound contenders to the US dollar. But as we stand today, I think we're going to continue to be a dollar economy for a long time to come.
So it hasn't affected the way you do business at this point?
Well, to define effect, I think as an investor, we need to always look at future trends and future direction of travel. One thing I should say, Yusuf, which is very important, changes in trade routes will ultimately result in changes in capital routes. More and more, probably the most important event that took place in the last 10 years is many of the world players, particularly the oil producers, have agreed or are more and more moving toward the settlement of oil trades with their counterparts in local currencies and not in the US dollar. This is, I suspect, a trend which will continue. And as that trend continues, there will be significant reserves of Chinese renminbi, Indian rupees, and other currencies. As that liquidity evolves and grows in many other regions in the world, that will open many doors for us as investors to start to look how to invest that capital.
To everybody watching today, we'd love to hear from you. Drop a comment below. Also take a moment to hit that like button. We'd really appreciate that. Hazem, a massive $55 billion deal to take Electronic Arts private. This is the maker of the franchise of FIFA. The group involved in the deal includes the Saudi PIF. I'm seeing Silver Lake and Affinity Partners. It's the largest ever all-cash leveraged buyout. What does it signal about where the private equity industry is going?
So first, you cannot do a $55 billion PE deal without a ginormous debt package behind you. So to me, first and foremost, it signals quite a fluid, liquid, and available credit market. Second of all, a long or a medium-term comfort in the state of the capital markets. And whether it's the Nasdaq yesterday hit an all-time high, the Hong Kong Stock Exchange is on a very, very solid footing. Likewise, many markets in Europe. So I think that comfort on the equity and the debt capital markets is providing a lot of the, let's call it the momentum to take EA private. Now, this also signals a third, probably the most important trend is we are moving into a digital economy that is far significantly larger than anything we have ever imagined in our lifetime. How that will continue to impact our lives for the next decades to come, time will tell. We have, I think all of us have seen the last few years, the emergence of the trillion-dollar companies. So suddenly a 55 billion doesn't seem so big. And perhaps, in many of the financial models of many of our private equity peers, putting an exit value of 100 to 100 billion doesn't seem so crazy after all.
Yeah, I mean, speaking to Dan Ives, he put $6 trillion on Nvidia in terms of where it can go from here, which is already the largest listed company in the world. Something that's been kind of making me reflect quite a bit, Hazem, is there was a time where private equity was rare, right? These days, private equity ownership is much, much more common. And, in many ways, that narrows the window to make larger returns, doesn't it? It gets a lot harder and a lot more competitive.
So, I'm pretty sure my statistics are right. There are today roughly 2,700 middle market private equity investors in the US alone. Okay, so by all means, the private equity market is no longer that rare or that kind of unique market that was the case when the industry started about 4 decades ago. But again, also as an asset class, Yusuf. It's a terrific asset class. It has survived the test of time. It has demonstrated its ability to deliver superior returns to many of the other alternative markets. Now, to me, the most important trend is probably the tokenization technology, which is available today. And I think with that tokenization technology, LP interests in funds first will very comfortably be tokenized, but also be available in a format that every single person can participate in it. It doesn't have to be millions. It could be $100, $1,000 or so, and also in a liquid format. So I suspect the biggest trend in private equity will not be the challenge in access to transactions, but in private equity investors being able to adapt so that their investments or their vehicles are tokenized and are able to provide investors a level of liquidity which has never been seen before in the last 4 decades.
Are you worried that things are getting a little bit too easy with available liquidity and with potential interest rate cuts? I mean, you talked about valuations and sort of the stock market rallies and record high in gold and cross assets kind of brings back memories of key inflection points, be it, the financial crisis of 18 years ago or the dot-com bubble. I mean, you can go along the x-axis further back, but there are plenty of lessons where we were at moments like this where everything seemed great and available, at least from, an investment perspective.
So, Yusuf, we have lived through many cycles, and those cycles will continue to happen in market shocks. And indeed, in a way, perhaps I was going to say we don't learn from our mistakes in the past. However, I think the 2008 financial crisis was it was a very important pivoting point, and I give a lot of credit to the central banks, to a lot of the regulators, who have put a level of restrictions on many of the banking institutions that today, despite the availability of liquidity, that is highly unlikely. It may impact, if there's any shock in the system, it may impact your everyday saver and pensioner in the way it did during the great financial crisis. A lot of that liquidity today is in hands of semi-regulated operators. That doesn't necessarily mean banks. Could that be a bubble? Maybe it is. Excesses always lead to some level of a correction, and perhaps it's a healthy correction. And perhaps whenever that time is, we'll probably do see a correction, and we'll do see a filtering of many players exactly in the same way we saw in the 2000 .com bubble, the 2008 financial crisis, and many other crises.
I see where you're coming from. There was an article in the Financial Times, Neuberger Berman, and basically the interview warned that the big firms are taking a lot of risk by lowering the bar to chase fees, and that they're harming the reputation of the industry more broadly. I'm assuming you do not agree with that in any way, shape, or form.
Well, it's a free market. It's a competitive market, and not just in private equity markets, but whether it's cars, laptops, solar panels, there will always be market forces that will drive pricing. The same thing in the private equity marketplace. There's no reason why it should be any different.
All right. So in that case, you're saying it's a natural evolution and not necessarily something negative.
Yeah, absolutely. And I mean, to add to the end, private alternative assets investors, we got to be making our money out of carry. Fees is secondary. Fees is nothing more than an advance to get you to kind of work on getting your business and doing what you need to do until you actually deliver returns to investors, and you take your cut on the back of it. And that's how it should be.
For everybody watching, a bit later in the show, we're going to talk about some of the biggest AI investment opportunities right now, and whether or not there really is still a haven left. So make sure you watch all the way to the end. Hazem, you founded BlueFive Capital after leaving Investcorp. You manage over $2 billion in assets, and you're looking to raise even more. Can I ask about who your backers are?
Sure. So we have done something very interesting, Yusuf. Usually most private equity investors, when they leave their firms, they they raise a fund, and then they kick off their business. We did something very different. On the onset, we sold a GP stake in the management company. We brought a circle of 25 founding shareholders, some of the very, very most prominent. They tend to be a lot of the financiers, personalities from Europe, US, Asia, as well as many of the very large sovereign families and merchant families in the Middle East. And these, Yusuf, are today our fundamental backers. Let me, if you don't mind, I do a small correction. We today stand at 6 billion of AUM, of which over 2 billion in a dedicated GCC private equity fund called BlueFive Capital. And we have announced that we'll be closing very soon, and I hope in the coming week, our first debut Asia PE fund at $1 billion as well. In addition to the inorganic acquisitions we have done, today BlueFive Capital, in addition to the capital which they have raised through these funds, we have also acquired inorganic strategy where we have taken over Sidra Capital, which is one of the most premium blue chip Sharia compliant asset manager out of Jeddah, and Neo Capital, which is one of the private wealth platforms out of Riyadh and Dubai.
Okay, tell us a bit more then about the Sidra transaction and how high a priority Saudi Arabia is for your business going forward.
So, Yusuf, very interesting. And actually, I'm going to take a small detour, not to Saudi Arabia, but to Southeast Asia. And let me touch on that. Sidra Capital, it is one of the most, as I mentioned, blue chip Sharia compliant asset manager out of Jeddah. They probably have a team that is second to none in developing Sharia compliant products, but not just the private equity real estate, but also fixed income products and other saver products. The game plan or the strategy out of that Sidra partnership is to offer, which hasn't been done before, fixed income and annuity products to savers, pensioners, and retirees in Southeast Asia. Why is that? Population. You need large numbers. Okay, the GCC is fantastic from a regulatory, from access to capital. However, you do need a large population to be able to sell a lot of these B2C products. I hope we'll be able to do it in partnership with many of our partners in Southeast Asia, starting with Indonesia. Between Indonesia, Malaysia, Brunei, and Singapore, you're talking about 300 Muslim populations. Many of them are looking for Sharia-compliant products. And to our surprise, Yusuf, no one is doing it yet. And that's why I hope that BlueFive Capital will be one of the very first participants in this particular category.
In terms of the opportunity set for BlueFive Capital, what else is at the top of your list? How are you looking to deploy the capital, be it on a sector basis or on a sort of geographic basis?
So that GCC Asia corridor is exactly our focus. Investing first and foremost in Southeast Asian and Chinese businesses that are looking to use the GCC as a gateway, either for manufacturing or distribution or access to other parts of the world, but also vice versa. And I think the time is right to start to look at many of the corporates in the Middle East, not just as there to cater to the local market, but to start to go global, backing local GCC and Middle Eastern champions and taking them to the global front. That's exactly what we want to do. That's what I've been doing with the European private equity businesses that we owned, taking European businesses global. It's about time that big parts of the world start to have exposure to many fantastic businesses in the GCC. Now, which sectors is that going to be in? Most likely in the four sectors which we at BlueFive have a big level of comfort, which is business services, industrial, engineering, as well as consumer retail and technology.
What about some other place potentially going forward? I mean, are you considering widening the scope, or you really want to zero in on the four that you just laid out?
I hope, Yusuf, very soon you'll hear of BlueFive Capital's debut into the insurance market. The insurance market in the GCC specifically tends to be one of the most fragmented market and one of the lowest penetration across in the world. We are on track to kick off an insurance consolidation play. Saudi alone has 26 different insurance players. Perhaps
26. Yeah, I knew there were a lot of them, but I didn't know it was 26.
It's a sector that first and foremost is ripe for consolidation, but second of all should benefit most from the advancement in data analytics and technology. As you know, on the insurance front, being able to price your risk, which is more and more today with AI and what have you, become even easier to do and less human consuming, but also a lot of the operational backbone, which is necessary for the insurance businesses, which today can be automated. So we do feel the insurance sector, both from a fragmented market, from the one that should benefit most from a lot of the advancement in technology and data analytics, should be one of the most beneficiary for the next decade. And I hope that us, BlueFive, will be one of the most active players in that sector.
What's going to happen over the next couple of years? Because we're getting close to 2030, right? Vision 2030 in Saudi Arabia. And some of the conversations I have made it clear that there is a need for some kind of new target. If you had to make a recommendation based on your experiences in the kingdom, what would that recommendation, what would that feedback be?
The Saudi benefits from one of the lowest energy costs in the world. That's going to be the case for a long time. Space, land. And what we seem to forget, that Saudi Arabia is only 120 kilometers away from Africa. That's it. Just crossing through the Red Sea, which is probably home to one of the world's largest location for natural resources. Combine natural resources with cheap energy, and you have one of the most attractive and a global location, which is quite central to the consumption economy. really put Saudi Arabia and many other GCC countries as probably at the forefront of one of the biggest beneficiary of as the on the industrial manufacturing front in the next few decades.
What's the biggest challenge when you're investing across different parts of the globe, right? So we talk about this axis of Asia, Middle East, Africa. What's the hardest bit? Maybe something that that takes a lot of your time.
A lot of these territories haven't been co-working for a long time. And as you know, in business, like in any parts of the world, any other sectors or fields, common understanding, developing that nature of trust, that circle of trust between partners takes time. These things takes time. It's not about an email or a brochure or whatever. It takes time to build trust. And trust is the fundamental foundation of any relationship, being an investment or in commercial and what have you. That, Yusuf, I suspect is probably the biggest challenge. Now, you gotta admit the advancement of the English language over the last 2 to 3 decades in so many parts of the world have made the word combined with obviously the internet and emails and what have you, have made the world a bit closer to each other. However, building that circle of trust between partners is, to me, probably the hardest. Not because they don't trust, it just takes time. And it's you just got to commit the time, the energy, the patience to build those relationships. But once they are built, they tend to be long-term in nature.
Let me get into your mind for a minute. What makes a good investment? Is there like a mental checklist, or maybe an actual checklist that you have sort of on your desk or maybe on the wall? Where you always, those are the kind of core principles that have in the past helped you find winning bets.
First and foremost, and I've now been doing this for over 3 decades, regardless what anyone would say or put in their flashy executive summary, nearly comfortably over half of returns made in private equity have been on the back of macro trends. That's it. That's a fundamental part. A significant portion of your returns come from reading the macro trends in the right direction or in the wrong direction. You could be the worst pizzeria in Florence in the month of August. You're going to make a killing, even if your pizza is horrible. Okay. And likewise, if you're selling ice cream in a ski resort in minus 20 degrees, you're going to struggle. So those macro trends, I think, play a very, very important part. So I think that's kind of first and foremost, the first and most important kind of variable. Second of all is there are certain secular trends in a particular sectors of the economy that play an important part. Today, it's very much the impact technology has across the board, and it's literally across the board in every single industry and sector, either technology from a distribution standpoint, from an efficiency standpoint. So I suspect, kind of macro technology, and third of all, sadly, the new aspect that needs to be taken into account is the geopolitics. And the geopolitics is not just about the US. The geopolitics about the environment or the regime which you are operating in, and likelihood of changes in tax regimes, in personal tax, and tariffs, and what have you, and that have a fundamental impact on returns.
So, do you see the frictions increasing between the U.S. and China, and is that something that takes quite a bit of your time and your thinking?
So, Yusuf, there are some terrific political analysts who probably can answer that question much, much better than me. I do not know a friction, or I don't have a visibility on that. But here's what I can tell you. That friction is significantly mobilizing a lot of the China capital, China industries, and what have you, to very proactively look at bridging partnerships and relationships with so many parts of the world. The GCC is a huge beneficiary of that. So is Southeast Asia. And that's why these are the 2 economies and sectors which we are focusing on. Having said that, every single one of your viewers, including the 2 of us most likely, have made money in some shape or form in the US. US have, over the many decades, have proven to be a safe haven for capital, a safe haven for returns, and a safe haven for just deposits. And you can't ignore that. No other nation in the world have yet match that. And there's a lot of history to that. And that's why whilst, kind of it's always exciting to talk about many other parts of the world, you cannot ignore North America and you cannot ignore the US. And I suspect in our lifetime that will continue to be the case.
I mean, you mentioned AI, automation, digital disruption. Could you perhaps give us another example of how that's getting factored into some of your strategies amongst portfolio companies?
Well, let's put it this way. Throughout my career, I've always been an impeccable fan of interns. Bring young interns and you put them in and they kind of choke and they kind of struggle to do many different tasks, and then you sit down with them and you train them and then they go to do other things, and then 10 years later they're like, oh my God, I met you 10 years ago and I was 18 years old and I was interning. My biggest surprise is the sheer speed and sheer inaccuracy that interns today do their work with. And that's because whatever you tell them, because whatever you give them, they just plug it into, Chat GPT, and they, whether it's a presentation, a model, and suddenly, boom, it's there in not even 20 minutes. And yes, it is riddled with inaccuracies. But why do I mention this, Yusuf? The use of AI, particularly the generation which is going to be engaged going forward, there is a level of trust of what you see online. That could be good, that could be bad. But second of all, there is more and more the comfort to use less our mind and more rely on these resources. I mean, I remember when I was a young analyst, we used to compete who can, kind of write all these formulas in Excel with our eyes closed. So you can actually, you've done so much typing and that you can really do everything with your eyes closed and press all the F keys and what have you. That, like any athlete, you got to train. You got to train your mind 24/7. If I'm a sprinter, I got to wake up and do my running and physio and all the good stuff. If I'm in an area, in a field where the end customer, investors, are looking at me for opinion and judgment, I need to keep training that thing, between my eyes and my hair. So, and that is probably perhaps one of my biggest concerns. There's a lot of other things, the interest, the efficiency, which comes in industries and what have you. And I think that's fantastic and it's going to happen. But if you ask me what's my biggest concern, it's the decision-making apparatus which will most likely continue to sit with us for a while. How would that be impacted by the potential laziness which we kind of attempted to fall into by relying on a lot of the AI technologies available today?
So it sounds to me like you're saying you're not a big user of ChatGPT or Grok or Perplexity in your day-to-day operations and how you go about spending your time.
I find it fun to get in a challenge. I mean, I love my job, but I love it not as in I want to get it done. It's like, no, I want to challenge myself. You know what? I want to sit in front of, kind of a model that has some errors and try to figure out how to fix it and what have you. Yeah, so I think it's okay. I mean, obviously everything with moderation. AI is a great co-pilot. And I hope the co-pilot. I'm 10 times probably a better driver if I have a co-pilot with me. There's no shame of having a co-pilot, but you got to be holding the steering wheel.
Yeah, I love that example. I mean, with autopilot in the car, I'm more comfortable with autopilot on the plane than with an autopilot in the car. Sitting behind the steering wheel, and I mean, I was in a BMW on the Autobahn, and this thing was driving itself or mostly itself, and that was already scary. It wasn't even fully automated. So yeah. Anyway. I want to move to some of the dynamics of the industry, right? In terms of how did you get into private equity?
Well, that is nearly, Yusuf, 35 years ago. I started my career in banking. Why did I go to banking from college? Very, very simple. It was 1991. And we watched the movie Wall Street on a VHS tape. And we thought that was the coolest thing. We had no idea what Wall Street was. We had no idea what investment banking was. But me and my roommates, we applied to banking because we thought the movie was so cool. These guys wearing suspenders and doing fun things. So But again, but those were the days when, it's much easier to get a job at banking than I suspect today. Private equity is, there's always this flair and mystique of buying things, and it's 55 billions, and you're not just an advisor, but you are you're in the middle of the action. And I'll be lying if I say, the value creation and hands-on experience, and no, it's not at all. I was young in my 20s, and at the time, Investcorp, which I joined, was one of the most reputed and best names, and they did all these exciting deals, Tiffany's and Gucci and what have you. And when I walked into their office for an interview, it was a dream come true to be part of that incredible story. And I think that's for all of us. We want to be part of an incredible story, an incredible, mission. And I think most likely many of your viewers have read Barbarians at the Gate, and you're captivated by the book, you're captivated by the story, and you just indeed, you want to be a part of it.
What's been the biggest shift in the private equity space in the past 30 years then, as you look back and sort of see some highlights?
So it was a relatively young industry. Access to capital was relatively straight. Leverage have played an important part in value creation in the early days of the private equity industry, and then that evolved to become more operational efficiencies. And I should say, Yusuf, that the corporate world is so much better today, I have no doubt about it, into business efficiency because of private equity ownership, which brings a lot of discipline, a lot of rigor, making every day count. I don't like the excess leverage that has many number of private equity firms have utilized. In the downturn, that has cost many who had nothing to do with it, employees and what have you, who have sadly have seen their pensions and many other obligations that this businesses owned disappear. That needs to be better regulated, and it's shocking, quite frankly, that it's not regulated today. If I look at going forward, Yusuf, the access to capital, investor capital, LP capital, is significantly shrinking. And I suspect on the back of that, like many other industries, that will result in a level of consolidation or just outright wind down. There are so many private equity firms that are not institutions. And basically the founder, his or her name is on the door. And when that individual lose their flair and access to capital, then most likely those firms will unwind in some shape or form. I suspect that would be the biggest trend which we will see in the next decade, the consolidation in the private equity market, and the evolution perhaps into a more concentrated market that most likely have links in some shape or form with the providers of capital.
Does this feed into the broader issue of the reputation of private equity? There's the public perception, and then there's the reality. There's also the truth that many people lost their jobs because of the restructuring that came in with private equity. But you're still saying that overall, this has been positive for the world.
You're touching on many different topics. One of them is employment. And when usually they reference to employment, you're more referring to your average worker or your blue-collar workers and what have you. But also perhaps some of the aggressive initiatives that many of the owners would have undertaken. First of all, these are two very different topics, Yusuf. Efficiencies across sectors, they follow macro trends. There's a reason why the steel industry in the UK have disappeared. It's just not competitive. And obviously with the right government subsidies and support, you can maintain that. However, long term, it's going to be somehow difficult. And there's so many shifts in the labor markets. And my personal view is to take more of put the onus on being the ability to have that labor force evolve, shift, retrain into industries that are competitive in those marketplaces, or just outright go and move and go to the world is much more flexible today in movement of labor. But I don't see the private equity market as, it's easy to pick on it, but I have not seen a study of privately owned companies and if they are more or less proactive in extracting efficiency and being, kind of perhaps aggressive in certain labor actions. So I don't think it's a fair criticism from the industry, just because there is no study on how public companies, how family-owned businesses have reacted, and if they have reacted better or worse than private equity investors when it comes to a lot of the human aspect of some layoffs or what have you.
Well, I appreciate you speaking openly about this issue and highlighting some of the nuances. In terms of where you decided to do your headquarters out of, right? So my understanding is that you set up in Abu Dhabi. Is that correct?
Correct, yeah.
Can you tell us a bit more about why? Because I also saw Huda Loeti was also on this. She was also on this program, and she has also decided to set up in Abu Dhabi. So I'm wondering what ADGM is offering you guys that's so persuasive.
Great. Well, Yusuf, here's my very cynical view of it. I was the CEO of a large financial institutions. I do see CEOs as once you leave your job, you're a bit like uranium. Kind of your half-life kicks in so quickly. And very, very quickly, you become just another ex-CEO, and the world is riddled with many ex-CEOs. So I was very conscious the first day I left that my half-life just started kicking in. So for me, speed was very important. Okay, being able to kickstart this group right away. My last employer was October 31st. Exactly 10 days later, November 11th, 2024, we kicked off and we launched BlueFive Capital. Why 10 days later? For a very simple reason. I wanted to do it on a Monday. My two options were November 4th or November 11th. The US presidential election was November 5th. I knew that if I'm to launch on November 4th, no one's going to even focus on it. So that's why it was 10 days later. There are few jurisdictions where you can literally move at that thundering speed. It's not Europe. It's not many parts of Asia. It's the GCC today, and specifically the ADGM. The reason why we chose the ADGM, first and foremost, it was the most speedy. I wouldn't say flexible or pragmatic because that would be unfair. They are as diligent and as thorough as any other jurisdictions, but they have been the one that have been the most expeditious into the launch and the setup of businesses. And that was an anchor part of our strategy, coupled with the fact that we do have a very, very clear plan to have a focus on the GCC Asia corridor. So obviously places like Abu Dhabi was a very natural location for us.
What advice would you give people who want to break into private equity in this day and age?
I'm going to put it in two parts. First, the youngsters, and second, those who want to kick off and launch their own firms. First, for the youngsters, it's I would say the private equity industry is one that marries both IQ and EQ. Gotta have both. And guess what? You can get both by just working, training, and never stop learning. And someone told me something at a very, very young age. And he said, if you want to learn how to have good EQ, pick someone who you have a lot of admiration and respect for, watch them carefully and emulate them, learn from them, even down to, how they sit, how they fold their arms, how they speak or not speak in meetings, and learn from developing that EQ. That is something which you can develop. The IQ piece, homework. There's no substitute. We're not trying to do open heart surgeries or reinvent, nuclear physics. Private equity is common sense, first and foremost. Second of all is just homework. Do your homework, study, learn, read. And third of all, Yusuf, and probably the most important ingredient is in intellectual humility. Private equity does attract a lot of alpha personalities who went to the very best schools, went to the big fancy investment banks and what have you. You just need one or two deals to go very successful to suddenly think you're the king of the world. And, you just know all the answers and you're the best investor. That arrogance that is up here is perhaps one of the very, I would say, the biggest issues which many private equity or some private equity executives have. And once you become that arrogant, then you stop seeing, you stop listening, you stop noticing the red flags. And that's where mistakes happen, and that's when careers end.
That's a very humbling view. I want to also go back to your country of origin, sort of Tunisia. Do you still spend time there? And what's your take on its future? I mean, given everything that's happened over the last 15 years there.
So Yusuf, Tunisia is in my heart, so always be in my heart, will never disappear from my heart. I'm not a Tunisian, I'm a very proud Tunisian, big difference. I'm so proud of what my country, not just in the last 15 years, Yusuf, the last 4,000 years, and its contribution to our civilization that has.
No, I meant the hardship of the last 15 years. I didn't say, what it's achieved, the hardship specifically, right? So
I know. Look, like all nations, nations are not measured in years or months, but they're mentioned in decades. Tunisia has been one of the most open-minded, pragmatic population, and we have one great blessing in Tunisia, and that's we have no natural resources. When you have nothing, you learn that the only way you will succeed is by relying on yourself, on being educated, on just hustling to get to where you need to do. And that's what, to me, characterized Tunisia. And that's why, despite some what appears to be economic or political setbacks, it's a nation of 11 million hustlers. We'll make it happen.
I love it. You also served on the Tunisian national shooting team. I'm not sure if this comes in handy with some of your meetings. Do you still practice today? And what do you enjoy most about it? Is it stress relief? Is it focus? Is it what do you love about it?
Yeah. So Yusuf, I had a huge fascination at my wife calls it a midlife crisis of being in the Olympics in my 40s. And when it comes to being in the Olympics, you really got to be the best of the best of the best. And however, the shooting category is one which is a bit more forgiving, and you can be that old and even not in the perfect physical shape and still be able to, as long as you can shoot straight. So it is really a sport of mental focus and mental discipline, as opposed to how big are your biceps. I have spent 15 years and been honored to, my very last participation was in 2017's African Championship, which was in Egypt, where I finished with a bronze medal. In the category which I shoot, you pull the trigger once every 60 seconds. So 60 seconds is a very long time. And all you do in those 60 seconds is calm, focus, and being very just disciplined before pulling that trigger. It has taught me for 15 years how to be very calm and very focused and not to react. It has been, it defines me, a lot of it defines me today. Sadly, I'm too old to be on the team, but I hold 15 years of beautiful memories with many of my peers and colleagues and on the team, and we had terrific successes. But I take that mental calm and focus with me today in pretty much everything I do in life.
Hazem, this has been a lot of fun. Thank you for being generous with your time, and I look forward to seeing you again soon.
Thank you for having me, Yusuf.
Thank you for listening to You're in Business. If you've enjoyed the conversation, like, share, and subscribe. See you next time.